Frederic Neumann, HSBC's co-head of Asian economics research. And here you are, Fred. Thanks for coming in. What a figure it is, because it really shows you the contraction. It really would alarm a few, saying that hard landing, soft landing, whatever it is definitely slowing down. This is a very weak figure, isn't it?
It is a 4-month low, and it's really disappointing. There's no reason to put gloss on that figure. But there are also a few things we should keep in mind. One is that the March numbers tend to still be distorted by the Chinese New Year, so we have to be a bit careful on how we interpret this particular number. The other thing is that actually new export orders picked up quite a bit, so that gives some hope that at least the global and regional trade cycle are picking up again. We saw the very strong Japanese numbers, for example, on the export side this morning, so that is consistent as well. And the other point we would make is that actually input and output prices dropped quite significantly, and that will reassure Chinese policymakers, and hopefully we'll get some easing measures thereby in the coming weeks.
Reaction as well, Aussie dollar falling to a 2-month low, the Kiwi dollar falling as well, so it's been pretty right across the board. They obviously look to China for their growth stimulus. I mean, what are the factors? We look at the official government PMI. How accurate are yours compared to theirs?
Well, there are two key differences. One is the seasonal adjustment. I know it's very technical, but it matters because
I love technical.
Yeah, but business surveys are very seasonal, so it really depends on the mood of businesses and so forth. So it depends on how you smooth that out, and the techniques are somewhat different in that regard. The other key difference is just the sample. So the Chinese PMI, the official PMI survey base is broader and is skewed a bit more towards large companies, but what we would our HSBC would survey more smaller companies.
I want to go off, if I can now, if you answer the question, to a bit of a thesis in your research. Little Asia against Big Asia. Great idea. Discuss.
Well, China and both India are actually struggling a little bit, as we saw with the numbers today. And we think going forward, we're not going to get huge upside surprise in both markets. We're fairly comfortable with both economies re-accelerating a bit, but the big upside surprises are going to come in the smaller Asian economies this year, like the Asean economies, like Korea, Hong Kong, where they benefit from the pickup in the global trade cycle. There we don't have the imbalances of massive inflation or deflating real estate market. So that's really, I think, for this year, if investors look for upside surprises, it's going to be in the smaller Asian economies.
Well, some of these, of course, are affected by exports, for example, Korea. Some affected by the inflation. The oil price clearly is very much an alarming factor right now. Christine Lagarde talking about it being far more of a worry than Euroland. Ben Bernanke last night, again, alluding to this as a consumer concern. How does it factor into your research now that the oil price is just climbing steadily and it's becoming just more of an issue than the euro crisis?
That's a clear risk, and I think the primary risk is for the U.S. consumer to buckle under pressure like it did last year, for example. Now, the initial signs of that, because of the tightening labor market in the U.S. and the better property market, that consumers can take that in their stride. But clearly, if oil were to go up another $10, $20 a barrel, that would be a big worry.
What about for Little Asia?
For Little Asia, that's an export risk primarily, but so far the data has surprised for Little Asia, not for Big Asia, because the problem with Big Asia is the domestic economies, whereas in Little Asia they immediately benefit from the recovery in global trade, and also domestically they're in better shape than both China and India.
David beat Goliath. Is it simple as that? Little Asia is going to win the year?
For this year, yes. I mean, in the long run, China is going to be the largest economy in Asia or in the world. It will grow faster, but the upside surprises, markets trade on expectations, the upside surprises will come in particularly ASEAN. Watch ASEAN this year. That's kind of the hidden gem for Asia.
Fred Neumann, always great to have you on the show. Thanks for coming in there, the co-head of economics research at HSBC.